welcome to the reboot of the trading battle. Our primary focus here is to trade markets live on YouTube, especially in such a critical moment. Pulver, we only have two contestants, but Chris Pulver brings his dog for backup. So we've got first contestant is Blake Morrow. He's a Forex trader with only over 20 years experience trading equities and Forex. And he's been able to turn 20,000 into 1.5 million. Your competitor here now, Mr. Chris Pulver.
Doing well, as always.
So Chris Pulver has, like I mentioned earlier, over 20 years of experience, also trading a good mix of stocks, options, Forex, and cryptos. He's a professional money manager and does live trading, as he just mentioned, every day of the week.
Good to be back in the ring with you.
Absolutely.
I want to just give each of you guys maybe just like 1 minute quickly. What's your bias ahead of the Fed meeting here today?
My plan is to kind of trade the market both ways and see if I can let my winners run. That's going to be my strategy for today.
Blake, you want to share yours in terms of a general outlook for this Fed meeting?
Since we got this false breakdown right there, and now we're breaking out the other direction, any type of pullback on a dovish FOMC, I'm going to be a buyer. I'm set up for either situation. What I hope we get is just some volatility.
Dollar domination or deflation. So maybe we can start with you, Blake, in terms of whatever is looking most pressing to you right now. And Chris, you can also be placing your own trade at the same time.
You know, as I was explaining to you guys, the way that I want to trade the euro today, I'd really prefer to buy the euro on a dip. And the reason why I prefer to do that is because, like I just said, I think the dollar's got a long way to go. And so any dip, really this 38% retracement, which really defines an uptrend or a downtrend. What I learned is when you have a shallow retracement of only of a 38% retracement, whether you're going long or going short, it really accentuates and reaffirms the trend is in place. And in this case, you know, I'm looking for that 114.18, which is the 38% retracement. So what I'm going to do is I'm going to try to buy euro dollar at 114. I'm going to take a 10 lot position. If we can get down there, that'll be good for the day because I believe that the dollar is going to be sold. I think overall, we're going to have ongoing dollar weakness.
So you're looking to get long the euro dollar. Awesome. And then I'll move over to Chris Pulver and same question goes to him in terms of US dollar here. What are we looking at?
I'm going to base my currency trade around what I think the stock market kind of needs to do. I think that the stock market needs a little bit of catalyst to the downside. I think there's big levels at 5,900, 5,905 on the S&P. So I'm going to do a pairs trade where I'm taking the dollar Swiss long. I'm trying to acknowledge that typical FOMC fashion and what happens a lot in Forex trading is the market can spike, you know, below this dollar Swiss low and possibly try to run that stop. I'm trying to give myself a little bit more breathing room on the euro dollar, and I'll pin this one to go euro dollar long.
She's taking two currency pairs with opposite biases on the dollar. You might say, well, why would you do that? Isn't that just going to nullify each other out? But the idea is if you get a big move on the dollar, whether up or down, you can play the volatility by saying, well, one of them is going to stop out most likely, but the one that doesn't stop out, the idea is, can I capture enough gain on the mover to materially make up for the loss that I'm going to take on the other trade? In terms of our prompt here, gold, long or short, you got to choose one. I guess totally up to you guys if you want to allow kind of also doing some sort of pairs trade, if that's something you want to do on gold too, Chris, if you want to do something with like silver. Blake, I'm wondering, same prompt to you. Do you have an idea on gold? Do you have a bullish or bearish bias?
Obviously, we have the FOMC in like literally less than 2 minutes. So what I'm going to do is I'm going to put in a buy order around the 618. I like to trade around the golden fibs. So I think a little dip below these lows at 33.50 would allow a little bit of a long opportunity. So in other words, if we drop here post FOMC, we get a little dip to 33.50. I've got an order already out there. I'm not going to be buying it.
Chris, do you have a trade on gold? Do you have one you want to place?
I'm thinking, honestly, I mean, Blake's looking for a dip to buy. I'm actually looking for like a rally to sell. So I would try to sell to like 34.95. So I want to make sure I'm not tying up too much margin here. Then take profit. If we get filled there, I'll go back down to like 3,400. So if I limit sell 34.95, there we go. And then stop loss to be around 35.50 or so.
All right, so we got some orders out there on the table. We're taking a look at some currencies, looking at gold here. Challenge number 3 is to trade the NASDAQ long or short. Feel free to trade it however you'd like, whatever you would like to do with it. What's your thoughts on NAS here?
I'm going to short a little bit of NASDAQ because, look, stagflation is not good for stocks. Period. End of story. So I'm going to be on the short side of that. So I got three lot position short NASDAQ right now at these levels, exit levels.
Makes sense. A little bit of stagflation, definitely not favorable for the NASDAQ as the Fed gets caught between a rock and a hard place, doesn't know what to do. What do you do in that situation? Whenever Powell gets asked, he kind of redirects the question. I probably would do the same in his shoes.
I think I'm going to go short Nas, long Russell. I'm going to pairs this thing and try to go after a net winner. I think that's a good way to pair. They typically have enough equal volatility where the Nasdaq's a little bit more jumpy than the SPY or the Dow. So I think if I pair it with the Russell, I think that's a pretty good trade for like I can go both directions. Hopefully have one winner. So far, I mean, we're seeing noise and it's been very choppy here these last few minutes. We had a fake out move to the upside. It's faded right back down to where it started at 2 p.m. So I'm going to get a short Nasdaq, long Russell, and see which one ends up hopefully giving me some net direction for Friday.
A lot of traders aren't familiar, but Chris is a master when it comes to pairs trading and volatility trading. That is his bread and butter. So coming up next, stay tuned. We got our final prompt, and this is a fun one. All right, so it is the ambush round. Of course, this is a notorious trading battle challenge where essentially you get to each pick a asset that the other person trades.
Chris, you don't want me to go first, do you?
I don't know what you're going to throw at me. I'm looking at some crazy exotics, but go ahead, Blake. I'll give you first dibs.
All right, Chris, you have to trade oil today.
God. All right. Is there anything I can pair this with?
Good luck, buddy.
I think it's fair. It's a one asset trade. I can pair it with maybe Brent. If you don't mind, that's what I'd rather do rather than trying to put a tight stop loss on what's crazy volatile. I mean, we're getting, some pretty big swings every single day. This whole thing has been like priced in a way. I mean, we're sitting right at the backside of this resistance zone. This is where inflation gets to be really tricky. If all of a sudden gas at the pump goes up, U.S. consumers know it. That's when inflation all of a sudden, it's not for another month or so when we have inflation data, but everyone's going to notice when, dollars per gallon goes from $3.19 to $3.79. I think there's just heavy amounts of manipulation here. I'm going to go short U.S. oil and long Brent crude as a pair and just try to make the numbers work. How about this? If I'm going to do a pairs trade, I'm going to give you two exotics. You said dollar krone, right? Or SEK. And so I want you to pair that with the peso.
Oh, golly. All right.
Everyone in the audience, this is what 20 years of trading experience, this is what that looks like.
I've argued that the dollar max was going to trade to an 18 handle since he got elected. And we have traded and we are currently just above 18. I still think Mexico is going to continue to do well in any negotiation. So therefore, I'm going to sell dollar mex as much as I don't want to, but I still am more of a Mexican peso bull overall. Let me make sure I put it at the market. I'm going to sell 2 lots, but I'm also going to buy 2 lots of the US dollar Swedish krona because I think the US dollar Swedish krona is, as I've explained to you guys, it's a false breakdown. It's going to be a breakout to the upside. So I'm going to go long 2 lots of the US dollar Swedish krona.
Oil is a tricky one, very, very susceptible to geopolitical risks and demand factors due to global economies, and it is a fickle beast to say the least. It moves quite a bit. You think this thing has more room to keep going higher? Could lead, a lot of times the dollar can kind of move in tandem with it. What are your thoughts on that?
Absolutely, I think it could. And if it does go higher, one of the things that is a precursor to any global recession you're going to see is just higher energy costs. And so, yeah, if we have that happen, the Fed is going to be dealing with not only a little bit of stagflation, but a lot of stagflation, and that's going to be a problem for stocks and everything else.
I think that a lot of the shock that happens in the markets is not so much what the underlying is doing, but it's the rate of change and the shock factor that happens. So when we see, I mean, that's the tricky part about oil is that this is conflict related geopolitical tensions and it immediately triggers some risk off. And all of a sudden you start looking at data, you start questioning the integrity of the rally. I think that's why oil always has this kind of dipstick check with the markets.
A gallon of gas is $3.50, then it goes to $4.50. That extra $30 to $60 or $80 that you used to spend every month for groceries at Walmart, McDonald's, whatever you did with that extra expendable cash that is now being spent on energy costs, that will tip the scale. And that's why there are certain levels. And that's why, for those of us that spend a lot of time, doing macro analysis and knowing where these levels are at any given time, like I would be worried if crude oil gets above 80. If it gets above 80, it's going to be a strain on the consumer that's already strained because of inflationary pressures.
That rise in oil prices can lead to inflation, which is the tax that everybody feels, right? Great points and great breakdowns on that insight about oil prices and their impact on the overall situation. And to Chris's point, I do think that rate of change plays a big role in terms of that dynamic level that you were talking about, Blake, too. So we will be following up and making posts on the trading battle here to keep everyone informed on who our winner of today's battle is. Chris, Blake, thank you guys for joining us for the first one back.
Thanks for having
Thank
us. It
you.
was fun.